All right, candle range theory trader with you on using a video showing you the easiest candle range theory pattern to trade. So let's not waste time and get right into it. The only levels that you'll need to monitor are the prior day's high and low. So if you're trading on a Tuesday, you're only looking at Monday's high, Monday's low. If you're trading on Wednesday, you're only looking at Tuesday's high, Tuesday's low, etc., etc. Okay, so that's the daily. You're only taking entries on the 1 hour chart. So the beauty of this is that you only check the chart on each 1 hour close. All right, so these are the times to trade. You start at 2 a.m. and then 3 a.m., 4 a.m., 5 a.m., and then 9 to 11. And that's it. By 11, you're done. Right. So those are the only times, those are the only windows for this system, at least, that you can take an entry. So let's take a look and see what we need to see. We need price to close above or below, okay, the prior day high or prior day low, basically a false breakout at the end of the day between 2 and 5 a.m. or 9 and 11, as I just stated. And it's going to be on, again, the 1 hour chart. You're only looking at that one chart. You're not going through lower time frames. It's not with this. Okay. So then you need to price to close back inside that same daily range of the prior day between that same time frame of 2 to 5 or 9 to 11. All right. So you're going to enter on a 1 hour close and 1 hour close only. Okay. And then the stop loss is going to go outside of the range. And I'll show you this. Take a profit you can do in the middle of the range if it's a larger size one, or the complete opposite side of the range. So let's take a look and see how this actually looks. So this is the daily chart of a pair. So you see here the prior day high, prior day low. You can mark these manually, or I use an indicator called mark levels on TradingView, and it'll do it for you automatically, where it'll mark out the prior day high, prior day low. And it's kind of hard to see, but a wick did come down and then come back up and then close. So we closed right here. But let's take a look at it on the 1 hour chart now, because this would have been a long example. So this is the trading day right here. And we notice, what did price do? Price closed below the prior day low right here. Did a little doji right here, and then came back up. Okay, so this closed candle right here, this candle closed at 3 a.m. This is the entry right here. It is not down here. Okay, price has to close inside. So just like I said, when you come to the chart during these time frames, you need price to close outside and then close back inside. And then you just expect for price to start heading towards the opposite side of the range. That is the whole system. I could stop the video right here if I wanted to, but I'm going to show you a few more examples. Okay, now this is the whole day on the 1 hour, and as you can see, price did not reach the complete top of the prior day high, but just take what you can get. Once you see price start to stall out near the end of the day, you definitely don't want to sit through this retrace. So definitely go ahead and take your profit while you can get it. Here's another example for a short. Again, this is the daily chart, so daily high and low can be marked automatically for you. And then we see price went above and then below. So let's take a look at it on the 1 hour chart. Here it is. This line right here was the prior day high. Price closed above it and then closed back inside of it. Just railroad tracks, very simple. Up and then down. So the entry would have been right here. There was a few hours of drawdown. Okay, that's not to be unexpected. Stop loss goes above the high of the day. You can say it like that, or outside the range, either way. In this case, the above this green candle would have been best, because as you can see, price did pin outside the range and then close back inside of it. So don't be shocked to see price retrace. It can and will do that often. But at the end of the day, the candle that closes outside of the range, that's the main candle that you want to put your stop loss above, as that's the safest one. And sometimes price won't even go back to it, but other times it can threaten like it's going to, but it really won't. So, but then eventually, the price did come back down. This one had a lot of consolidation, but don't think it strange. Okay, as long as this high, this candle right here is the very key one, the one that closes outside of the range. I'll show you that on the other one as well. See how this candle here closed outside of the range, and it did come back. This trade right here, well, no, it wouldn't have stopped you out, but this low, hell, no other candles closed below this low right here. The first candle that closes outside, that's like the point of no return if you're right. Price should not close back below this candle right here. That's the ultimate fake out candle. So once again, price should not close above this candle right here. Okay, it might come close, it might wick it, but it shouldn't close above it, right? Okay, so let's keep going. This is a long example. Even though this candle closed with the indecision, this is going to be a long example. So let's show you that. So even though it went down, there was no trade here because this candle simply moved too fast. And as well, I think this was before we would have started trading as well. But sometimes it'll hit both sides. It'll close back inside and then just take this price level down here, and then just go back up. This one would have had quite a bit of consolidation and drawdown because your entry would have been at 5. But if you notice, price did come down for 1, 2, 3, 4, 5, 6. And then hour 7 is when it finally poked up and then gave you some profit there. So again, as long as the stop loss though doesn't get threatened, it wicked it a little bit, but it closed here. So 1 hour closes are definitely the most important price action states pay attention to. Don't worry about the wicks. Worry about if it closes below this low. And as you can see here, none of these candles closed even close here. So yeah, it'll threaten it, but again, what I would do if you don't want to, definitely don't want to sit at the chart all day, I will set a price alert for the close here. If you didn't want to sit at the chart too often, set a price alert right there. So let's see here. This is another long example here. We got prior day high and low marked. This is on the daily chart, so let's drop down to the 1 hour. Let's see our best entry. So this green line, I did the prior day low because the line wasn't that big, but we had quite a few closes outside of it, and you'll see that as well, where price will just keep going down, but the price action is still the same that we look for. Even if you have all of this, we're not going to start trading until price close back inside the range. So this is fine. We're not trading down here, but on this open here, this was at 2 a.m. So as soon as this candle right here spiked up and closed inside, we take this trade right here. You could have put a stop loss outside the range here. Obviously, it's easy to see because the chart isn't in action, but the safest stop loss is going to be below this candle here, the lowest candle that closed outside of the range, okay? So, but again, this would have been a fairly sizable stop loss. Sometimes you'll have that. But if you want to play a little, or not play a little more fast and loose, but try to get a tighter stop loss, you can put it near the range bottom because you really don't expect for price to go outside of the range. So, either one of those would have been fine. And then price just spiked up to profit. So there you go. This is another short example here where you have a small candle, daily candle, price spiked above the high and then closed down. So let's take a look at the 1 hour. And it did break out of this, but I don't teach, breakouts. I'm just saying, get what you can. This candle right here was at 4 a.m. So that's in our trading window. So, and you would have been in profit. Your take profit would have been hit in 1 hour. And so that was just 1 hour straight to profit to the prior day low. So that's where I teach pretty much that using this method, you can expect your take profit to the max take profit being the opposite side of the day. So that's it. If it breaks out, that's great. But again, I don't have a way to predict this. I don't know when that's going to happen. So it is what it is. So in conclusion, you won't get every move that acts like this. Sometimes this move will come at midnight. Sometimes it'll come at 11 a.m. Sometimes it'll come at 10 p.m. I don't teach that a person should just watch the chart 24/7. Okay, I just don't believe that. I believe that we're best served narrowing our focus. And in this case, all the examples I showed you happened between 2 and 5. When I just back tested this real quick to show the video, I didn't really see too many examples or really any at all that I wanted to include in this that happened between 9 and 11, but definitely keep track of those time frames. The closer the 1 hour chart or 1 hour candle closes to the range high or low, the better, because these times there are times you're going to have some pretty big stop losses when you're trading the 1 hour chart, because you have to remember this isn't the 5-minute chart. You do have more price action in an hour versus 5 minutes. So that's why some of the stop losses can be sizable. This is the whole system, though. Like I said, it's simple enough for a middle schooler to trade. If you stick to the times that I've given you and the layout that I've given you, you will be fine. But at the end of the day, risk management is still number one because nothing's guaranteed. You can and will lose some of these trades. You may over leverage. You may take out a lot sizes too big, and price might go against you and blow your account. So that's why I say be careful with your entries, because at the end of the day, you don't want to be. You have a position like this. Let's say you go heavy on this position, but then price is going against you here, and you end up losing your account because you may have risked too much of it. So you can be right, but still lose the trade if you don't know how to manage your margin and your risk. Okay, because you don't get surprised when price starts to come back. Okay, before it hits your TP or starts to really give you the price action that you want to see. But again, that is the whole system in a nutshell. This is it. I'll be giving you the whole thing. So again, managing risk is what gets us paid, not trading. But if you have any questions or comments about it, feel free to leave it in the comments. And I appreciate you watching. Have a great rest of your day. Take care.